I'm Ralph Vince, and today we're going to talk about my price oscillator. This is an interesting indicator. You don't use it like most oscillators that you would use. And unlike most oscillators, which measures price relative to price X bars ago, this measures the shape of the daily bars. That is, the high-low close, open, close yesterday, relative to the previous bar. Here's how to use this indicator. Here we are looking at the S&P for the last year. And I'm going to go add the price oscillator without changing the basic parameter. It has one parameter, the length of periods used in the formula, which defaults to 4, and I'm leaving it at that. Now the first thing you need to do in using this indicator is to determine what the longer-term trend is of the data you're looking at. In this case, the S&P index, as of this time, the beginning of January 2015, well, we've certainly been in quite a bull run here. So the trend is definitely up. And when the trend is up, I'm only looking to trade after I get a value below 40, below the dotted red line. Similarly, if the trend were down, I'd only be looking to trade after I get a value above 60, the dotted green line. Now, when I have a reading below 40 in a defined bull market like the S&P, I'm only looking to take very short-term breakouts to the upside. So I get a reading below 40, and that means at any point where I have a nice upside breakout on a 1 or 2 day basis, that's what I'm looking to trade. This is low-hanging fruit generally, and I can take it, and as soon as I get a reading above 60, I'm not taking any more breakouts. So I wait for a reading below 40 again, and I have an upside breakout, and I take that. Another reading below 40, I wait for the upside breakout, and I take that, wherever that occurs in here. Generally, you get the nice big bars that happen after a drop if you're trading this way. Like I say, it's a way I've used of picking low-hanging fruit. Other markets that I like to look at this in, aside from the S&P, are the interest rate markets. If I'm looking at it in equities, I like to trade it in big, broad, heavily participated in markets. It's worked very well in interest rate vehicles as well. Here you have it in the 10-year. Again, this is in a defined bull market. So anytime I get a low reading, I'm looking to take the first upside short-term breakout. It's also a wonderful indicator to use to buy dips in the direction of the prevailing trend. Let's look at cable here. This is a market this has historically worked very well in. We've been in quite a decline here for almost 6 months now in cable, and every time this thing has gotten above 60, it's been a great time to add to short positions, take a short positions, or even look to take the short-term breakout to the downside. I'm Ralph Vince. This is my price oscillator, and it's available exclusively on TradeShark.